You know, after talking a few episodes ago with Andrew about Costco and him bringing up just how unique Costco is and how they built their retail company not like a retail company, I started wondering what other companies are out there that really think outside the box like that. And I stumbled on a car company that we all know, probably grew up wishing we had one, and that's Ferrari. Ferrari is an amazing, amazing company, at least in my opinion, and they've really gone outside the box in how they've built their company. It's not really a car company at all, and we're going to dive into it and we're going to explain why.
You're tuned in to the Investing for Beginners podcast. The show for the long-term investor. We cut through the noise to focus on what works. Compounding, discipline, and the conviction to buy wonderful businesses and stick with them. Your path to financial freedom starts now.
So, I don't know if you've ever put any focus into something like this, Andrew, but whenever I started reading about Ferrari, reading their the 20F. There you go, 20F, which if you don't know, because Ferrari is a foreign company that's being traded in the U.S., they report on a different form. So their 10K is actually a 20F. I did not know that until I started researching for it, and I couldn't find their 10K. I'm like, why can't I find their 10K? So I had to do some Google foo. Come to find out it's a 20F. So the more you know. Anyway, when I started really digging into it, it's Ferrari isn't a car company at all, Andrew. It's more of a luxury brand. It's a Rolex with a V12 engine. Is really what it is. And it blows my mind, some of their numbers. And I know you skimmed their 20F as well. Is there anything that just popped right off the page for you the second you started looking at it? Or did you have to really dig into it before you started to notice differences?
I mean, there are differences. Because I was skimming, I just went to a random place. So I didn't know that American luxury, I guess American's not the right word. Western luxury brands are really taking off in Asia right now. I guess there's a lot of wealth being built in some of these Asian countries. And so they're really taking to the luxury brands. Like the luxury brands needed the extra notoriety as it is. But I just thought that was interesting for me personally, because being somebody who follows Starbucks and Apple, and just knowing how in China some of the opposition to American brands, again, this is not an American brand, but it's a Western brand. Ferrari does not seem to be having those same struggles, and if anything, is growing in more demand. And that's what's really interesting about the Ferrari story, is this story of demand for the brand.
Absolutely. I would say the thing that popped directly to me is, we've talked about Ford on podcasts, YouTube videos. We've covered the traditional automakers. We've covered Tesla, all that stuff. And the Ferrari is the exact opposite of all the other automakers, in that it seems like all the other automakers are in a race to the bottom. They're trying to produce as much as they can and sell as much as they can. And Ferrari's like, nah, that's a lot of busy work. I think we'll go the other way. That's just too much effort. When you look at the traditional auto market, so Ford, GM, Dodge, what do you notice about operating procedures? I mean, and if you really think about it, they got to dig with unions, right? That's a big part of their bottom line. They got to dig with the retirement packages, all that stuff. They got to dig with inventory, and I don't think I've ever seen a Ferrari commercial. In fact, I've never seen a Ferrari commercial at all, but definitely haven't seen a Ferrari commercial where they were offering money back uh, on your purchase. So, I mean, is there anything else that stands out to you, either positive or negative, about the traditional auto manufacturers and their profit margins and their operating bottom line?
You make a really good point, and I think this is something that you can expand as a mental model, not just for the auto industry, but for a lot of other industries. And that makes it hard, right? Brand does not equate to moat. So I might like Ford or you might like Chevy, just because we as individuals have an affinity for a brand doesn't mean that particular brand has a moat. And you're seeing this play out in this exact scenario where there's just like an endless supply of vehicles. And is that really the case? Like, I go back to this phrase, as long as it gets me from point A to point B, right? There are some people who say that about their vehicles. Is that what creates this commoditization of a car? And I think it's something to unpack. What do you think? Like, why do you think there are so many mid cars out there that people can buy? Why are we flooded with all these options? What's your opinion?
Well, I mean, it's because they have to make money somehow, and I mean, I guess I don't really know, but I would assume it's they have to make money somehow, so they just flood the market, whereas Ferrari has taken the exact opposite approach of we're going to try to make sure there's one less Ferrari on the market than what is demanded. And I don't know, man, it just blows my mind that has been successful. And I see why, because it's such a luxury brand. It's just, I don't know. Was it a calculated risk on their part? Did they know it was going to work? Like, that's just such a crazy concept. Is it not? Like, do you hear that and you're like, oh yeah, that's cool? Or does it seem super crazy to you as well?
It does. It breaks every preconceived notion you might have about running a business or creating a car company or whatever. And it takes a lot of chutzpah for sure to say, you know what, we're going to trust that by doing less, we're going to get more. It's bold. It's bold, God.
Right? And so that is your word for the day, chutzpah, sponsored by Ferrari. Not really. We're not sponsored by Ferrari, but yeah, chutzpah is definitely your word for the day. What is the definition and spelling of chutzpah?
Get out of here. Get out of here. Come on. Let me use words without being judged. Come on now.
No judgment. Just it's been a long time since I've heard someone use that word. It's hilarious. The other thing and before we started recording, we brought this up, is that the Ferrari, it's a 2-year wait list just about to get your car. So it's not only, Tesla has gone the route of making it super easy to get your car. You literally order it on an app. It gets delivered. You don't even get car keys. You use the app to unlock it. And so I mean, they've gone the exact opposite route. And Ferrari's like, nah, you're going to order it and then you're going to wait for us to build it. I mean, again, just super, super bold strategy. But whenever on the reverse end, I think seeing it work, it's mind blowing to me. I think it's one of the coolest machines, referring to their business model out there. On paper, it's one of those things. I think on paper it shouldn't work, but somehow they found a way to make it work.
How long do you think they could keep it up? Do you think it's easy to sustain or hard to sustain?
That's the thing. I think this is the more sustainable. We've seen, in 2020. I don't have the chart pulled up. Do you have the chart pulled up still?
For operating margins?
Yeah.
Yep.
What was it for 2020?
So let's see. Going back to 2013, they've step changed higher their operating margin. So just picking a few years out, 2018 was like 24%, 2022, 24%, and now they're at 29.5%. So a record, at least over the last, whatever this chart's looking at, 15 years, 11 years, 12 years, a record in operating margin. And by the way, you compare that to their competitors, 29% operating margin versus less than 5 for Tesla, less than 2 for GM, and Ford. We don't even want to talk about that. That's a almost minus 5 for Ford. So they're not moving in the right direction. At least in the last year, they haven't. So completely different profit margin profile between them and your typical automaker.
Yeah, and that was my point. I think it's much more sustainable what Ferrari has built versus we look at the traditional automakers, and they are, in some cases struggling, and in Ford's case, severely hurting. And I don't think that, I'm not saying that I'm predicting Ford's going to have to get bailed out again or anything like that. It's just that's the reality. We have an oversaturated market. Inflation's too high. All the restrictions, everything is working against their favor right now. So, I mean, it makes sense to me that they are struggling. But at the same time, Ferrari is not struggling. And I think it all goes back to Ferrari's business model.
So can you give us some of the numbers on Ferrari? When you mentioned some of these numbers, it kind of blew my mind a little bit because it's like, wow, these are in a completely different ballpark than someone like a Ford.
In 2025, Ferrari sold 13,640 units. That is less than they sold in 2024. Even though it was less, they still went up in total revenue by 7% to 7.1 billion. And their, like you already mentioned, their operating margin is 30%, or just almost 30%, which is absolutely nuts. And this is the coolest thing I found in their 20F. 20% of their total revenue comes from custom paint, bespoke, I'm not sure what that is, some sort of stitching, and unique materials, whatever that is in the car. So 20% of their total revenue comes from just customizing the car.
Mm-hmm. That's crazy.
That's freaking cool. Crazy, bro.
Yeah.
It's so cool. So when we start talking about the numbers, when we talk about the fact that they only produced 13,640 units in 2025, could you imagine the panic if, and we won't even say a traditional car company drops to that number, just we'll say drops in that number,
Mm-hmm.
They drop 13,000 units, and all of a sudden Wall Street's freaking out.
Mm-hmm.
So, I mean, it makes sense why there are a lot of investors so high up on Ferrari.
You mentioned they have one manufacturing plant?
Yeah, one manufacturing plant in Italy. They have 5,000, somewhere, don't quote me exactly on the number, it's like 5,100-ish employees, most of which are in Italy. I think they have around 30 worldwide, and those are going to be like your sales manager type, getting the contracts and getting the customizations and getting them back to the manufacturer. So I think the key lesson in all of this, Andrew, is I'm going to put this in Steven words that Steven understands, and that is they've prioritized value over volume. And that has garnered a massive amount of respect for their product. And I mean, it's so funny because if you go to Europe, BMWs, Mercedes, they're like, Ford Taurus, they're freaking everywhere. They're not crazy expensive. But if you have a Ford Bronco in Europe, like you're balling. Like that's a luxury car. But notably, Ferrari is one of the few European cars, and I mean you got Lambos, things like that, but Ferrari is the pinnacle of no matter where I've been. If you have a Ferrari, you're doing well, we'll say.
Right. Well, the engineering also, like you can't just manufacture this kind of scarcity and expect to continue it unless there's some underlying fundamental, something underlying and fundamental that kind of anchors all of this. So maybe for people who aren't car people, like just how impressive is some of the engineering that goes into these vehicles, and why is it considered such a improvement over my wife's Toyota Corolla?
Hey man, I like the Corolla, dude. That's a great car. It is a great car.
It is.
A question for you though, Andrew. What you talked about pricing power when we were talking about the Fed. I think it was last episode. And when you think about a car company that does 7.1 billion in total revenue, their revenue's going up even though they sold less units. They create this scarcity. What can you break out of that or break down out of that from a pricing power perspective?
I mean, yeah, it tells you if volumes are down but the revenues are up. There's only a few ways you can slice that, and the easiest one, if everything else is the same, means you had pricing power. So, bottom line, they're selling these cars at a higher price than they were the year before. And so, like we were mentioning on the episode about the Fed, that makes them one of those businesses that are resilient to inflation, and a business that sells to multimillionaires and billionaires. Maybe that's quite obvious that they're inflation resistant, but it's still one of those metrics you can use that you can apply to any business. Not every business will report volume numbers. Not every business will report specifically on like average selling price. But if a business does report on volume, you can use those metrics and compare how they're moving from year to year and do exactly what we're doing now. You look at the top line, you look at those revenues, and you compare it to the volumes, and it's a pretty clear signal that if revenues are up, even though volumes are down, they are flexing their pricing power. And one of the things that I get really, really excited about pricing power, and I was thinking about this in the context of Apple, because if you think about an Apple phone, most normal people, like I would consider myself not normal because I don't look at like the payment. I look at what's the total cost of something. I think most normal people look at the payment of an iPhone as a bill. It's like, okay, this is just part of my cell phone bill. So one of the things that Tim Cook said in their recent earnings call was he was asked about using pricing as a lever to help with more growth. He was like, we're not going to pull on that lever right now or in the near future. So what that communicates to me is that they haven't even tapped all of that pricing potential. Like there's still a long way that pricing potential could go. Charlie Munger called this a Lollapalooza effect, and he used Coca-Cola as an example. When you're selling ounces of Coke and it's pennies, an extra penny or two is not going to make a huge difference to the consumer, but it's going to make a huge difference to a shareholder. And the fact that, okay, if it's just a couple pennies, we have a lot of pennies we can go up before it starts to affect the consumer. Bringing that all back to Ferrari, talking about the pricing power. If you have a multimillionaire, billionaire, high net worth individual buying a Ferrari, I don't know the answer to this because I am not in that camp, but it's just interesting food for thought. Is there a big difference between, say, 330,000 and 390,000? If it's like, I got to get this vehicle, I have to get the V12, I have to get whatever it is there more flexibility in that pricing power? So you beg the question, like, does Ferrari have untapped pricing power? And that's, I think, where pricing power gets most exciting, because yeah, we have businesses that have pricing power, they flex that price over time, but the really long lasting businesses may have pricing power that they haven't fully tapped into yet. And that can give like really, really long years of compounding potential, which is what lazy investors like me would prefer to have in our portfolios.
Absolutely. And to take it just a one step further, um, Andrew, is not even the car, the car itself isn't even their only source. As we talked about, they get a lot of revenue from customizations. They also receive a significant amount of money from their Formula One sponsorships. A lot of this racing stuff, which I didn't know this until I was reading, but they actually rent their engines to Formula One. They aren't bought straight out. I think that's a super interesting strategy to rent the engines versus selling them directly. I mean, we were talking about Costco like reinventing the wheel as and not being a retailer, being a subscription. I mean, that's almost what Ferrari did with an engine. Like that's pretty crazy. But I mean, at some point, I feel like we have to stop looking at Ferrari as a car company and just looking at it as a lifestyle luxury conglomerate. It's not a car. It's a company that makes cars, but it seems to be there's so much more.
And the numbers play into that, and they back it up. I'll just throw a few out there real quick, if you don't mind. Last 3 years in revenues are up 12% a year. If you look over the last 5 years, they're up 15% a year. And ROIC, one of my favorite metrics, is 22% over the last 5 years. That's their average. So we're talking about not only does the car look nice, not only does the 20F look nice, but the financial data looks nice as well. And so it makes sense that people love this company.
No, I think that's super fascinating, Andrew, especially when you start breaking down all those numbers. And you know, whenever I mentioned Ferrari, you're like, yeah, everybody loves Ferrari. But then when you start actually reading it and digging into it, I quickly understood why. And I think so. Ferrari's PE right now is somewhere between 34 and 36 times their earnings, and compared to Ford and GM and all the others, that's astronomically high. What is their PE telling you right now? Is this a company that maybe we'll watch for the future, or what's that PE telling you right now?
The PE is telling me that investors like this stock a lot more than they like Ford and GM. And hopefully that's obvious for the reasons we mentioned, like Ford and GMs are making these cars that are more like a commodity, and Ferrari's more they have a scarcity and it is different than a commodity. I think what it also shows is the growth prospects. Investors see a much brighter growth future for Ferrari than they do Ford or GM. And some of that could be related to the stumbles that Ford has had over their electric vehicle rollout, for example. But a lot of that could just be people believe in the pricing power of Ferrari and they think that will continue and that it's sustainable, basically. And then the last piece of a high PE ratio, if it's not the growth, because we're not talking about take over the world kind of growth, that would ruin the scarcity behind it. So what we're really talking about for Ferrari is consistent above average growth. And so alongside that, you would also want to see steadiness in their earnings, steadiness in their profits. While all the other car companies scramble and they have these huge booms and busts as the car market oversupplies and undersupplies. We saw that with the pandemic and all the shortages with the supply chains and things like that. Ferrari just keeps, like Costco, just keeps chugging along kind of slow and steady. And I just did an interview with Lee, who wrote a great book called Stock Market Maestros. And he mentioned to me off the air how there's a book he read where the ending returns of a slow, and I put slow in air quotes, but just like steady growth, like not crazy high, not crazy low, just steady, versus a company or a stock who's swinging, 70% up, 40% down, things like that. The steady compounder is the one who actually wins out. And that's because the math behind those incremental multiplier improvements is quite powerful, versus when you're losing, it's like the tortoise and the hare. When you go too fast and then you're slow, you're making up for a lot, and that takes a lot of effort and it takes a lot of time, and it's generally less ideal. So I think all those factors play into their PE. Do you think there's anything else? Like, do you think Wall Street, just everybody on Wall Street wants a Ferrari, so they'll buy the stock as a substitute? I think somebody in our community mentioned something like that.
I remember that. I don't think. No, I don't think so. I think it's just a solid company, and people see it as they're going to make money, and that's why they're willing to pay a premium for a luxury brand that really isn't a luxury brand. I mean, that it's not a Rolex, it's not a an Armani. It's a company that makes a car, and that has just really forced itself into that circle of luxury brand. And I think that's, I guess I'm a nerd, but I think it's super neat to see. So you mentioned it already, but I think the ultimate test for Ferrari is coming. And this kind of really, I don't think it's going to hurt them or bankrupt them or hurt their PE or anything. But in May of this year, they will be introducing their very first fully electric car. And my question to you, do you think people are going to embrace it? A completely quiet Ferrari that doesn't have that V12 roar that we know and love? Like, I don't know how I feel about it, man. Like, I feel kind of jaded. Like, that's not a Ferrari.
Right. This feels like a leading question, so I don't even know if I should answer this. I also have my skepticism, but I will say, so I'm gonna play both sides, as I like to do, so that everybody's happy today. You roll your eyes. I know I deserve it. So I also, look, first car V8, like, had to rev the engine in a parking garage because that's what you do with a V8. There's nothing like the roar of an engine. So I am all about that. However, the first time I drove a Tesla, that was like you just like jumped in a time machine, and the mix, just that stark difference between pedal to the metal and a Tesla versus your average ICE vehicle, V8, whatever. It's crazy. Like, it is crazy. So there is experiential value there. There's something there. There's something there with the power of electric. But my question, which I don't know the answer because I don't have Car and Driver magazine stacked up in my office, is if part of the allure of a Ferrari in particular is the vast difference between a Ferrari supercar and like your average Corvette or whatever, like premium car, if that gap is so huge, is that similar gap transfer over from your average electric, like a Tesla, versus the electric Ferrari? Because I think they need to still maintain that kind of a gap in value, like gap in premium and superiority and performance and everything. That's my thought, is like, if a Ferrari that's all electric is just fractionally better than the fastest Tesla, I don't think that will succeed. But who knows? I don't know. What do you think?
I can't imagine for a single second that Ferrari is going to introduce a car that isn't just crazy fast. I could be wrong, but I imagine it'll smoke any Tesla or any other electric car legally on the market. There are other fully electric supercars out there that aren't for sale. I saw one. It was wicked cool. It was a hydro engine. Wicked neat. Yeah. And it was wicked fast. But it cost like $5 million to make it. Like, yeah. But it was a crazy cool concept. Really cool car. And like it's like it looked like a cockpit of a fighter jet when you got into it. Like you got into it and like the seat went down, tilted you back into like the driving position. Then the steering wheel came out from the dashboard into your hands. Like it was super neat. But again, $5 million to just build it. So, but anyway, I can't imagine Ferrari is going to introduce a substandard, and when I say substandard, I mean substandard to them, car. I imagine it's going to blow the socks off of anyone interested in an electric Ferrari. I can't wrap my head around wanting, and don't get me wrong, I love a Tesla. It's probably going to be the next car I buy. Teslas are crazy cool. But if I'm going to wait on a list for 2 years, spend that amount of money on a car, like it's gonna be loud. It's gonna be obnoxious. Everybody around me is going to know I have a Ferrari, and I guess that's just the kind of douchey personality I am. But like,
that's on brand. Yeah. I feel like it almost needs to come up off the runway a little bit, maybe give you some airborne. This is like as a natural part of your ride. Are you, when you buy your Tesla, are you one of those guys, you like the doors that go vertical, or do you prefer a horizontal door? Have you seen those doors that go vertical now?
No.
When you open them?
On a Tesla?
No? I don't know if it's on the Tesla, but I'm curious, doors in general, you know.
I mean, if it's not a Lambo or a McLaren, then no, the door, just traditional doors. Like Lambo and McLaren, they're the ones that made that famous. I'm not sure which one made it more famous, whether it's Lambo or McLaren, but yeah, they in my opinion, they own the rights to the vertical rising doors. Every other car manufacturer, and I think like that's why Ferrari's never done anything like that, at least to my knowledge. Their doors have always opened horizontally, and I could totally be wrong. Not a car expert, but I would imagine that's part of why, is that they don't want to try to be confused with anybody else. So at least I would imagine that's the case.
That kind of disappoints me about the whole electric vehicle push. Like, if anybody could afford to not go electric, wouldn't it be Ferrari? With the whole, everything our conversation was up to this point is like, Ferrari makes their own rules. They play by their own rule book. They are the ones who cap their supply. Why do they have to go into electric vehicles? They must be cooking something good. Otherwise, to me, it feels like a step in the wrong direction, you know, a step towards what everybody else is doing, trying to chase what everybody else is doing.
I disagree. I think they, and again, this is a straight assumption, but based on what you just said, the up to this point, Ferrari makes their own rules. And I imagine it's like they see what everybody else is doing, and they're like, yeah, we could do better. And so they're just going to do better to just prove the fact that they can do better. And you know, they make 1,000 of them, sell them, and they move on, or whatever the case may be. Or it takes off. Everybody absolutely loves it. And it makes them even more money and gives them an even stronger foothold as the premier car luxury brand.
So next time you're at the Autobahn, I don't know if I pronounced it correctly. Are you driving Autobahn? Are you driving the electric version of the Ferrari or the V12? You can only pick one.
So, I don't think, and so in Europe, there's a rental car place called Sixt, and you can rent luxury cars. And I've driven all kinds of crazy cars. I don't think you can rent Ferraris.
Oh, really?
I've never seen one.
Okay. So there you go. They are literally in a league of their own.
I've rented Lambos, BMWs. I'll tell you, hands down, of all the cars I've rented, the BMW, I don't remember its nomenclature, but the M5 with the sport package, it's got the body kit and everything on it, just looks crazy cool, like you'd see in Need for Speed, or not Need for Speed, Fast and the Furious. That was probably one of the coolest cars I ever drove on the Autobahn. That thing was so fast. Lambo was the worst. I hated it. But I promise if I had saw a Ferrari, I would have rented it. Hands down. Have to.
Are you interested in the stock? What should investors who are interested in this stock, what should they think about? What should they do? How would you approach this?
I'm not sure because I didn't do a DCF or a whack on it. So I don't know if it's a fair value right now. I mean, the 35 PE, that's high. It is definitely at a premium. But I definitely I don't think it can hurt you because, like you said, it's their game to lose. At this point, the only path they have, unless they choose otherwise, is to grow. So I don't think you're going to lose money at all. But as far as if it's a stock I would buy right now, I'm not sure.
Yeah, that's a great answer. I don't have anything to add there.
Awesome. So that's going to wrap it up for this episode. We hope you enjoyed it. Let us know in the comments what your favorite luxury car is. Obviously, you know mine. It's a Ferrari. I will own one day. In fact, I didn't ask you this, Andrew. So before we bounce, what is your favorite era of Ferrari? Do you have
So like,
one?
you ever watch the movie Iron Man?
Yeah,
You've seen Iron Man, of course.
of course.
That Audi R8 or whatever it is that he rolls out in, that's the one for me. That one, the one that they drove as they filmed that, that's the one.
So you don't even want a Ferrari?
No, I don't.
Okay. Anyway, so mine will be the classic Magnum PI TV show Ferrari. It's a Magnum PI is an old, I think it was 80s TV show. But what's the actor's name? I can't remember his name. Dude with the stash. Tom Selleck? Yeah. He drives around in a dope Ferrari, man. And that's me, man. If I could get a Magnum PI Ferrari, I would die happy. Nothing else would matter. I would just be happy forever. I'd live in it.
We'll bury you in it. You don't need a casket.
Perfect. Perfect.
Tint the
Well, I
windows
don't know.
and-
That's almost like car blasphemy, if you would. You can't do that to that kind of car. Deprive its beauty to the world. No, I'm kidding. Let us know in the comments, whatever platform you're on. Don't forget to subscribe to us so you get updated when we drop a new podcast. Thank you so much for joining us today. And as we bounce, never, ever, ever, ever forget, invest with a margin of safety. Emphasis on the safety. Peace.
You've been listening to the Investing for Beginners podcast. All show notes can be found on our website at einvestingforbeginners.com. to master the basics of stocks in 7 days. Sign up for our free email series at einvestingforbeginners.com/newsletter. Until next time, have a wonderful day. The information contained is for general information and educational purposes only. It is not intended as a substitute for legal, commercial, and/or financial advice from a licensed professional. The hosts may own positions in the securities discussed. Review our full disclaimer at einvestingforbeginners.com.